You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite. I know it's my favorite. I hope it's yours. Bi-weekly source for all things options related. Putting a little bit of an asterisk on that bi-weekly this week because, of course, we had the big Labor Day holiday here in the States. So all of us were out gallivanting and barbecuing and having fun. And there was no option block, so we apologize for all of you who were deeply disappointed. But now we're back. And we're ready to do some option blocking. And where can you find all that goodness? Let's say you were on vacation yourself and you said, I really want to catch up on all of that options goodness they have over there on the old option block, all 400 plus archived hours of that fine program, or indeed any of the other dozen programs on our network. Well, indeed, find them wherever you find your favorite podcast, including the mothership, the flagship, theoptionsinsider.com. We made it really easy for you. Just surf on over to the homepage, you click play on the player, and whatever the most recent episode on our network is, it plays for you right there while you're surfing, while you're playing, while you're watching, and reading the rest of the content on the site. Of course, click on the Insider Radio Network tab. That also pops up with the full overlay, giving you all the shows, or just go to your favorite podcast provider, iTunes, TuneIn, Stitcher, Aha, I'm forgetting a few probably, but there's quite a few out there. Or just grab our mobile app, available for iOS, Android, indeed, the burgeoning Fire OS. No shortage of ways for you guys to get your hands on this here program, download it, stream it, enjoy it, and then fire off your questions, your comments. We love to hear from you guys. And joining me on the old program today, starting off with the man beaming in from far, far away, a.k.a. the hinterlands of Maine. You know him, you love him as the Rock Lobster himself, Mr. Andrew Giovinazzi, from his many myriad appearances on the old network, does a few dabblings on the old website as well. And when he's not doing that, he's over there mentoring his mentees over there at OptionPit.com. So he's a busy man, even though he is in the middle of nowhere. Mr. Rock Lobster, welcome to the program. And indeed, how do you find the time?
I don't know how I find the time, but you know what? I always try to make time for the Options Insider Network. I do. I feel like it's a good thing for me to do. I get out and I can reach people.
Yes, you can reach and engage with the masses virtually, even if you can't see them or be anywhere near humanity yourself.
Correct. The only thing I'm looking at right now is the clam guy in the cove. Other than that, there is not. That's about the extent of the activity in the hinterlands of Maine right now.
Lighting it up, clamming it up there in the old cove in the hinterlands of Maine, moving our gaze a little bit closer to home, a little bit closer to the Chicagoland area where we are out in the hinterlands of Illinois, but not so far out, the temperate and lovely St. Charles, Illinois, where we are joined by none other than Uncle Mike Tusaw himself from RCM Wealth Advisors. He of his former Apple fame and now just general man about town fame. Uncle Mike, welcome back to the program, sir.
Always happy to be here on this post-Labor Day Thursday auspicious occasion.
Auspicious occasion, indeed. All right, we have a lot to make up for. We didn't have a chance to chat earlier this week. Our listeners are saying, man, we need some option blocking. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you guys know the drill by now. Welcome to the Trading Block. This is indeed the portion of the show where we break down what's moving, what's shaking, what was lighting up the old tape on the old markets today. It's been a bit of a interesting week, shall we say, from a market perspective. Once again, the vol is back. We're up, we're down, we're yin, we're yang. So if you were betting on a nice, easy start to September here from a trading perspective, you have been woefully disappointed. But if you're a vol guy, you're an options trader, chances are you're both of those if you're listening to this program, then you're probably at least somewhat happy, unless you're one of these guys out there just blasting out weekly puts all day, in which case maybe rough going for you right now. We are recording this, of course, on Thursday, September 10th, for all of you playing the home game, and it is indeed yet another green day on the old board today, with most of the major indices closing up ever so slightly on the day, certainly compared to what we've seen of late. It's a pretty negligible move, about 8.25 or so handles out there. In the S&P is where we finished the day, a little bit of vacillation in between there. And of course, about 50-odd handles in the Dow, about 35 or so in the old NASDAQ. And of course, the VIX cash up day, taking it on the chin quite a bit, or at least a handle or so, down to about the mid 25 range. If we had guessed on vol views 2 weeks ago that we would still be about where we were in the VIX cash land, or perhaps a little bit elevated, that probably would have surprised a lot of people. And yet we are floating right around those levels still several weeks later, as the vol refuses to die. Mr. Rock Lobster, aside from a little bit of a sell-off today, it's still out there, it's still active, we're still rocking and rolling. So go ahead and give us your tales of perhaps woe or amazement from today, as well as what may have caught your eye earlier this week, because we haven't been on in about a week.
I know I was having a hard time finding anything to do today in particular, most of the day. But the futures are still like in a weird place. Like the September future is relatively expensive, given the fact that it's not the VIX future anyway, it's going to expire before the Fed speaks. And it's still kind of, it's not signaling a lower vol. I mean, they sold it off here at the end of the day, I believe, and I think they're still pounding on it into the close. But tomorrow could be another day, because we'll see what happens in China and all the rest. Let me see where they're pricing this here at the end of the day. They sold it down $1 here at the end of the day. So this is but it's only 20 cents, 30 cents away from a 25 level VIX. And we had, the last 2 days, we had at least 2.5%, 3% swings overall. So the market is still pricing very volatile conditions. And I think, though, the part that is most interesting to me, at least from a vol perspective, is the back month futures. If you look at all the back month volatility products, they're kind of trading around their lows, meaning that back month vol has not come in very much. It's dropped a little bit from its highs, but by no means has it come in a lot. So the market is still looking for a lot of volatility to come. And I think everybody's leaning on this Fed like, if they raise 25 basis points, it's going to be the end of the world. Maybe that makes things a little weaker in China. Who knows? I don't, but for some reason, like these FOMC meeting minutes, used to have a lot of volatility surrounding them. They were good, pretty reliable vol sales for 2 years, until they stopped QE, when they're like, okay, we might raise, we might not raise, which is because now they're not apparently flooding the market with liquidity anymore. And now all of a sudden, I think anyway that this could be a pretty major vol event, meaning if they decide to raise, there might be a short-term panic. We might see that 3-4% move, something ugly, who knows. But they're like, we're going to wait a while because we'll just see how this thing China plays out. That might be a relief, and we might start to see sub-20 VIX. That's how I think it's going to play out. But that's just speculation by me.
You think it'll take a raise just to get us back south of the 20 handle again? Something just to get that, that uncertainty off the table? That's the only way we break south of 20?
I think I don't think we're going to see south of 20 until the Fed says something, and then China has to stop falling apart, because all of a sudden, it went from China's not going to grow to what if they're in a recession? What if all their banks collapse? You get that sort of, and everybody just goes to the mattresses immediately. They want to be the first to predict the next financial crisis or something. So But those back month futures are still like 22, 23. They're not 18. And we all know how hard it is to maintain volatility that high. So the only thing I can think of is people have really crawled into the front part of the curve, and liquidity providers have to hedge by buying the back, and that's how it works. So we'll see how. I would be surprised if we sustain this volatility after the Fed says something, because right after that will be an earnings season before you know it.
Earnings season, it never stops. It's a gift that keeps on giving.
It is. You get bored with what's going on this month, you got next month.
Exactly.
Something might be happening.
Exactly. But, it is funny. And listeners, by the way, if you are very interested in all that stuff Andrew's talking about, the VIX futures term structure, et cetera, we did a deep dive into that on the last episode of Volatility Views. We got into all the nuances therein, of course, the backward portion at the front, as well as that ever-increasing bid to the back months and what may be causing that. So if you're interested in that, we really, really took a deep dive into that. Check out the last episode of Volatility Views if you'd like to learn more. We brought on some guys who spend all day just trading the term structure out there. So we really took a deep dive into that because it is, to use a technical term, kind of wonky out there right now, kind of what we're seeing out there from a technical perspective and fundamental perspective. Certainly worth a closer look. But it is kind of ironic, Andrew, you kind of pointed to the fact that we do need the Fed to kind of do something just to kind of shake loose what lingering fear and uncertainty and doubt is floating around out there in the marketplace. It is kind of funny, though, when you think about it, not to belabor the Fed thing because every other media outlet on the planet is doing so on a regular basis. But we are still just talking about if they do raise, we're talking about 25 basis points. This is not the end of the world, and yet we're kind of treating it like the Fed's going to put a gun to the head of the market and just pull the trigger. It's kind of odd, all this Sturm und Drang, as the Germans like to say, over essentially 25 basis points. Seems kind of odd, does it not?
It does. We've become, and I think it's just the bigger symptom. We just become a bunch of sissies, right? Everybody, they just complain and worry and just get on with your life. Stop moaning. Not everything is perfect, okay? You're not going to have zero interest rates forever. Just get over it.
It's like when you move to Florida and, and all of a sudden you're from like New England and all of a sudden you can't handle below 50 degrees anymore. It's like we've been in an environment where we haven't had a Fed raise in the better part of a half decade. So we just can't handle it. Now it's the notion of the weather dipping below 50 is on the horizon and we're all freaking out and grabbing our winter coats.
I mean, yeah, what were the interest rates in 1999 and 98, 97 and 96 and 95? Okay. They were a lot higher than this and we still had economic growth.
For the days of irrational exuberance. Well,
but you had economic growth. The government wasn't spending a whole lot of money on nothing. I mean, it was a different, things were run differently, and we'll see if that ever comes to pass again. But, I like those days when the market was exuberant and everybody thought things could go to, a jillion. That was fun for me.
Those were heady days in the old market. We now turn our gaze back to the realm of St. Charles. Uncle Mike, a lot has transpired in the old markets since the last time we've had a chance to gather here around the old Option Block All-Star panel. So what caught your eye over today's session as well as over the past week or so?
In general, a couple things catching my eye. The first one, we're kind of at a stage now to where, like, to add to what Andrew's saying, the Fed's the big news that everyone's waiting on right now. What are they going to do? Are they going to raise rates? Are they going to lower rates? But I don't think it's so much that. It's the reaction to whatever they do is what's going to be cause for concern, at least from my standpoint. Let's say that the Fed does lower interest rates. I really don't see, or I'm not lowering interest rates, I'm sorry. They pause and don't raise interest rates. If they can lower interest rates, that would be impressive. But let's say that they continue to do their strategy of punting and do absolutely nothing and just say, well, we need to see more data or we need to just wait till the next meeting and to see whatever the case may be. The market could take that two ways. The market could say, well, okay, they're not going to raise rates and everything is fine and we don't have to worry about the Fed for another couple of months. Bye. Should that be the case, I really don't see a lot of buyers coming in, quite frankly. With that being said, at best, we're going to get a punt from the Fed. And a punt means that eventually we still have that lingering over our head as to when is the Fed going to raise interest rates. Because of that, I don't see a major rally and this is in the S&P, should the Fed decide to not raise rates. Now, with that, let's say that the other reaction that could happen should the Fed decide to punt is that people could say, okay, things really aren't so hot. The economy really isn't moving that well right now. If the Fed's still not even raising rates, that confirms it for us. Sell, sell, sell. So either way, I'm not seeing a ginormous rally. Now, let's say the Fed does decide to raise rates. Let's look at the two possible scenarios that could happen with that. Okay, well, things aren't so bad. The Fed can even raise rates. Our economy must be strong. Let's do some buying. That could happen. But even if that's the case, I don't see a lot of buying coming on board right now because of the fact that we're at such high levels right now in the market, relatively speaking, to the all-time highs. Now, should the Fed raise rates, the other reaction that could happen is, oh, crap, they raised rates. The Fed isn't going to help us anymore. We no longer have the Bernanke put, the Yellen put, whatever you want to call it now. We no longer have that. Sell, sell, sell. So I guess from my standpoint as to what's happening right now, I think we're going to be volatile over the course of the next week or so leading into the Fed meeting, depending on when you're listening to this podcast. I could see 30 and 40 point moves in the S&P on a daily basis to the upside or to the downside. But I really don't see any type of breakout trend in the marketplace until after the Fed. And I think that's going to have a lot to do with what earnings actually are, regardless of what the Fed actually does. So I think everyone's watching the Fed at this point. A couple other things that are catching my eye right now. Bonds are starting to pull back a little bit at this point. FXI, the China ETF, is relatively stable. And Apple's still not moving that much. So at this stage, there's really not a lot going on in the two-saw BBI world. But what I would definitely recommend to people is I'd be very cautious going into this Fed meeting. And then after the Fed meeting, I think you might be able to get a clearer picture as to what longer-term trend the market's going to be doing.
Since you invoked the fruit company, we also have to address them. By the way, like we said at the beginning there about the Fed maybe cutting rates, that would be, if they can figure out a way to do that, that would be both impressive and the biggest fake out in the history of the markets. I would have to salute them for their sheer audacity on that level. We can call it the great Fed fake out of 2015, talking up rates all year. Then they find some magical systemic way to cut rates below zero. That would be very impressive indeed. They're giving everyone rebates out there across the board. I love it. Good stuff. But yes, you did invoke the fruit company, so that means we have to talk about them. But of course, they were the big news earlier this week. They had their big, essentially annual product announcement for the phones and the pads and all that fun stuff. And typically, what we have seen in the past is in the go-go Apple days, a pronounced run-up leading into these events. In fact, it's averaged about 5% run-up in the 30 days leading to a big iPhone announcement. This time, didn't really see that. In fact, of course, a little bit of a more rocky 30 days ahead of this announcement than we could remember for previous years, so that gives a little bit of context to it. But this time, actually, shares were down over 6% in the 30 days prior to the announcement. So already we had a big sell-off going into the announcement. People thought maybe this would be the one time that indeed we would see a bit of a pop coming out of the announcement because the stock had taken such a beating going into the announcement. Didn't see that. In fact, we saw about a 2.3% sell-off, actually about 2% sell-off yesterday. Of course, the stock up about 2.5% today, so kind of gained back whatever it lost recently in the name. So kind of like Uncle Mike said, a lot of back and forth on the day. You have to go back to the announcement of the original iPhone, all the way back in 2007 to see a real banner day after an iPhone announcement. That was about an 8.3% jump in the stock. And I think if anyone back then knew what that would turn out to be, what that would herald for the future of that company, it would have been a much bigger bump indeed, because that really set off a revolution in phone technology. But since then, it's kind of been iterations. A lot of people seeing the new 6S as iterations and not really jumping. Some people being attracted, though, by the old iPad Pro. Uncle Mike, is that big iPad going to do it for you? Is that finally going to lure you into the Apple ecosystem with an iPad Pro for you, sir?
Not quite. And the product might be pretty cool. I don't know. But I mean, is it innovative? Is it to the level of innovation of world-changing products with which Apple has set the bar so insanely high through the years? No, I don't see that happening at all. It's one to where Apple changed the world with the products with which they've released in the past. Is this product going to change the world? It is not.
So the Uncle Mike Innovation Index still unchanged.
It is unched.
That's unfortunate, sir. I was hoping for some big swing one way or the other. Mr. Rock Lobster, you're saying you're having a hard time finding anything to do out there this week, and that might indeed include Apple. And it moved a bit yesterday and had some action. It's been rocking and rolling, averaging about 1.1 million contracts a day of late. Today, on a big rally day, or at least a somewhat decent rally day in the market, only doing 150,000 contracts today. So, Mr. Rock Lobster, you were not alone in your inability to find something to do today, because apparently Apple option traders couldn't find anything to do today either. This is one of the more anemic days in recent memory. Anything over there in the old pit chat lighting it up? Anyone trying to trade in or out of the Apple event, or is everyone pretty much like Uncle Mike, kind of watching their hands of Apple right now?
I actually closed an Apple position today. I had kind of like long an Apple butterfly, and I was long a put butterfly in the SPY, which actually the SPY butterfly went nowhere, and the Apple fly did actually pretty good today. So I thought I could close it today or take the risk of trying to close it next week. So I figured I'd close it today. So that's mostly, all I did was unwind stuff. I didn't really put on anything new. As far as Apple, we did look at some upside fly positions. Of all still pretty high. You could sell 90 puts in October before earnings for still pretty decent money. You could sell those put spreads. We looked at them. But as always, I am loath to sell put spreads on a day when an underlying is up on the day in this market. So, but yeah, I still think there's a lot of opportunity in that kind of stuff. I think there's a lot of opportunity in some upside flies. Probably finance them with selling some way out of the money put spreads in October, and could generate some dollars out of that stuff. So we looked at it, we priced it, and then Apple ripped like $3, and by the time it was there, we're like, eh. So, and Apple probably be down, $2 or $3 tomorrow or Monday, and then we'll look at it again. So I think that a lot of that stuff, Tucson's right. You're trading this. There's definitely range bound stuff. And, and at least prior to this, the range is saying it doesn't look like we're going to crash, but it doesn't look like we're going to rally huge either until after we get over this hurdle. I think the market generally, historically, anytime there's uncertainty, we're volatile. And even if the market doesn't like the news, at least it takes the uncertainty out and things can, follow whatever that sort of fundamental path was. And right now, there's just enough uncertainty. I don't know if it's because all the hedge funds are trying to move money from one currency to the next, and because that causes a lot of dislocation. Mostly if things are blowing up in their face, they're selling stuff that they made money to pay for other stuff. So that's kind of a common refrain because they're all in the same trade anyway, and they're all hitting the exits at once, which tends to blow things apart. So as far as Apple goes, I think that's still the opportunities. We were laughing about the 75 or the 75-65 put spread 2 weeks ago, and obviously that's about worthless. But now I'm kind of looking at like 90, 80 put spreads and stuff like that.
What a difference a few weeks makes. About 20 handles.
20 handles for the same price, which is amazing. So it always galls me, and then I gotta go. I don't want to sell 15 handles up for the same money, but I probably end up will. But more likely than not after Wednesday to get me to sell put spreads.
There we go. I think we all missed our chance there on that great 75-70 put spread. I think a few of our listeners maybe got in on some of them. Not for those redonkulous levels of 80 to 65 cents, probably more around a quarter, but still not bad given the fact that it all went away exceedingly worthless in just a few sessions. Does give you a good frame of reference, you're right, too, Mr. Rock Lobster, to see we're still around the same level trading-wise, and yet we're talking about a 20-handle difference in spreads. Gives you a sense of what's cooking out there from a vol perspective, at least when it comes to Apple. And now it's time for us to keep on rolling into our next segment. It's time to kick off the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
everybody. Welcome to the Odd Block. This is indeed the portion of the program where we break down some of the weirder, the wilder, the more bizarre paper that is catching our eye over there at theoptionsinsider.com. If you'd like to learn more about these alerts, get into some more detail, and we have time to on the show, or even indeed read some other ones you don't have time to discuss here on the program, surf on over to the mothership, theoptionsinsider.com. Click on the insider, excuse me, that would be for the radio. Click on the unusual activity tab there, or the call out there on the top right of the homepage, and you can get all these fun alerts and much more. All right, turning our attention to today's activity, as Andrew alluded to, a bit of an anemic day despite some of the vacillation we saw out there in the markets. So finance mentioned activity was an intriguing prospect, but we were up to the challenge. Going to kick things off, as we are wont to do a lot these days, in the petroleum realm. In particular, this one is Whiting Petroleum Corp, ticker symbol WLL, closing today about $16.11, down about 40-odd cents on the day today. So the name that averages about just a hair shy of 8,000 contracts a day, doing a little over 12,000 today, so about a 50% pop out here in good old WLL, and a good chunk of that, about 7,000 of those contracts today come in one pretty sizable roll. A friend of ours taking some money off the table and also deciding to double down a little bit farther out. In particular, it was the SEP 17 OC 18 call spread that caught our eye, going up 2,500 by 4,500 times. Looks like paper was selling SEP, buying October, doing that on a ratio for 80 cents. It went up in about 2 blocks over there on the old Amex. It does indeed have the feel of a bit of a house money rolling out of these strikes that are a little bit closer to the at the money. Interesting timing on these, of course, because it was flirting around the 17 handle just intraday today. So hopefully he got out at the highs there and not flirting around the 16 handle or so today, but about a buck range or so in the stock today. So put this up on the Philly, on the Amex, selling SEP, buying OC, doing it on a ratio. As we've said before on this segment of the show, when they do this, it usually is an indicator. When they do more on the second leg, it's usually an indicator that they're sitting on some house money. Things are looking pretty well for them, and they want to keep the party going and indeed double down on upside. And our friend not just doubling down, but also picking a little bit farther out of the money strike, saying, you know what, this thing is going to rock and roll. It's going to keep rocking and rolling all the way through the 18 handle, and it's going to do it through October. So a friend of ours here, Mr. Rock Lobster, got some house money burning a hole in his pocket, decided to just double down and say, you know what, the upside party will continue in good old WLL. So take us home. What's your take on our friend doing the old ratio rollout here in WLL?
That is a mouthful. The ratio rollout. How would Elmer Fudd say that? The ratio rollout. Yeah, I think they're looking, what's weird is like supposedly this Iran deal is going to happen. Oil prices are supposed to go down, but they're not. They're kind of holding up at lower levels, but, they're not on their way to $30 a barrel anymore. So I think they are looking for, what's amazing is all these companies, just you look at the prices of them and they're like, oh my gosh. I mean, this used to be a $90 company a year ago, $92 or something. I guess that's the state of the oil industry. It's either the buy of the century, and I think that's what this customer's doing. They probably scooped. I mean, I think Whiting traded as low as like $14 or something, $13.50. Hard to believe that. And they bought some cheapy calls, and they're saying thank you very much. I'll take some more. So they're looking for something to happen. I would expect some of all these mid-sized companies would be taken out at some point, but so we'll see. But they're definitely buying some more time. Yeah, you're selling your SEPs now for 65 cents when the underlying's the underlying's $16 and you're along the SEP 17s for 65 cents with a week to go. You're hitting the exit in these things.
Since we're talking some upside call scoopage, it's a perfect segue to our next victim, cellular-butant, call them what you will here. We still haven't decided what really to call our victims, our special guest stars on the Odd Block segment. Is it a boon? Is it a bane to be featured on the segment? Perhaps a bit of both. But we're turning our gaze now over to the tech side of the space, not to the fruit company, no, but to a maker of a lot of the chips out there and a lot of their phones, including, I believe, the iPhone as well. This is Qualcomm. They make all the tech that kind of underpins all the fun tech you like to carry around in your pocket, of course, ticker symbol QCOM, closing today about $55.33, up about $1 or nearly 2%, so outpacing the market a bit to the old upside today. And what we saw talking about, well, actually, before we even get into that, this is the name, doing about 30-odd thousand contracts a day, doing about that same level today. So it wasn't the overall volume that caught our eye as much as it was some love on a very particular strike. In particular, it was the SEP double half. How's that for a strike? The 55 half calls that caught our eye today. When we first started watching these this morning, there was about one block going up on the ISE for nearly 3,000, 2,818 to be precise, going up paper scooping, paper buy-in for 66 cents. As the day went on, the love fest on these calls continued to the total of over 12,000 calls going up, with a lot of the ladder buyers jumping in at higher levels. They ended up on the day up nearly $1 bid, these calls, so the underlying move and all that love on that strike combining to juice these calls up a little bit. So interesting stuff out here for all this love. Looking at a chart of Qualcomm, this one hasn't looked that good of late. In fact, it's a name that has, shall we say, suffered over the better part of the past year, while the rest of the market are getting all that love. They were trading, Andrew was saying earlier, name has been trading, much higher. This name kind of falls into that range as well. Hit back to about in November of last year. It's flirting with nearly the 80 handle, and today now about the 55 range. So it has come off substantially over the past 8 to 10 months. And our friend out here deciding, this far, no farther. I think we're due for perhaps a turnaround here in Qualcomm, and he's loading up, putting his money where his mouth is, and also saying it's not going to be a very long term. We don't have to wait very long for this turnaround to materialize ever so magically in Qualcomm. It's going to happen soon, to the tune of the SEP expiration cycle. Mr. Rock Lobster, what's your take on this? By the way, I should mention, open interest, only 700 contracts, so clearly open in paper, and a lot of it. Mr. Rock Lobster, we got a friend here who seems to be just loving himself some Qualcomm by SEP expiration. What's your take on this near-term love explosion here in Qualcomm?
He's loving himself to the tune of, I think he's already doubled his money. They were trading a little higher today. Those calls are trading 90 cents now, and they did not close them. So they might have sold stock, possibly, but it looks like.
No way, baby. He's riding that train all the way to the top. He's not selling any stock.
I think he is going to ride the train. I just feels like, I think Qualcomm is an Apple thing. Maybe there's a little halo love there somehow. But, it's like Qualcomm's only a 14 PE stock. And, it's not like they don't grow. So, again, there's good fundamental reasons, but obviously you're buying a 2-week call. You're looking for some other kind of announcement or some sort of magical thing to come, flying around. So it looks like obviously their calls are already in the money, but I think they want a little bit more. They're not looking for 60 cents. I feel like they're looking for a couple of bucks on them.
Yeah, this guy's not coming in dumping down 12,000 of these, picking them up just to scoop $1 in the stock. I'm sure he won't sneeze at it, but he wants more. He's a lover.
Yes,
he's a diehard.
He wants lots of donuts. Yeah. He wants the dozen, not 2.
Exactly. Which is interesting because, all the trends seem to be pointing maybe against Qualcomm, certainly why the stock has been under pressure of late. They make, like I said, all the chips, the Snapdragons and others that tend to power a lot of the higher-end handsets out there, the iPhone and others, a lot of the Android phones as well. And everyone knows not exactly boom time for high-end handsets. So interesting. Our friend here perhaps knows something the rest of the market does not, and putting his money where his mouth is. Check this one out, listeners. If you're interested in some upside call love, a name maybe poised to pop sometime soon, has already had a bit of a run today, or indeed looking for some action and you're interested in the tech sector, this may be one to keep an eye on. As we move our attention ever forward here in the Odd Block to our final victim, our final celebrity guest, if you will. This was a cheesy game show from the 70s with Charles Nelson Riley. And this is actually may fall into that category. Rite Aid has appeared a few times, so he could be our frequent guest. Indeed, good old Rite Aid, ticker symbol RAD, R-A-D. Closing today an even 8.5, up about 35 cents, or a little over 4% on the day. So a lot of love out there in good old RAD today. The folks saying Rite Aid is where the action is, outpacing the market substantially here, and that's of course on the tail end of a rally that keeps on going out here. And Rite Aid was trading nearly 470 not that long ago, October of last year. So this thing is on its way to doubling if this keeps up pretty soon. So Rite Aid been on quite a roll. And not surprisingly, we got a friend out here in the options rolling as well. Before we get into that, this is the name does about 20,000 contracts a day, doing nearly 30,000 today. So a nice third bump in overall volume, and almost all of that size coming in this pretty sizable SEP-OC 9 roll that went up when we started catching it. It was about 14,000 and change going up on each leg. So there you got pretty much 30,000 or so, almost right there, just in that one big spread, going up for a whopping 14 cents. Looks like paper was again doing the old sell SEP buy OC roll. This time not on any sort of crazy ratio. He's just essentially buying himself more time to the tune of 14 cents. And again, looking at today's rally in the underlying, this may not be the craziest of trades, certainly not as crazy as it was even this morning when he was nearly a buck out of the money. He's went up in several blocks over on the Philly. If you've been paying attention to Rite Aid, you know this guy's been keeping and rolling at this 9 level for some time. So he's been waiting. He's been kind of drawing his line in the sand, saying, come on 9, putting his place bet on the craps table on 9, and he's yet to hit the point. He's getting a little bit closer now, so perhaps this is finally his month. Maybe October will be the moment when he finally hits that big 9 bet that he's been waiting so long for. Mr. Rocklobster, take us home on our friend who's putting it all on 9 here on the craps table.
I like that, putting it all on 9. He keeps doing it. If you go back to the unusual activity, he's been trying, and you know, he's kind of scraping out pennies. He loses some pennies there, makes some pennies there. But I had to give it to him. He's sticking to it, whether it works or not.
Yeah, something in his model said Rite Aid at 9, and he's stuck to it.
He's like, I'm not letting go. So I think he had done okay on on the 8s prior to I think a pretty big earnings announcement a couple cycles ago. And I think he's just been taking that money and, continuing to, and essentially roll it up. So, and we'll see if he's finally right. I don't know. Maybe he will be. Anything's possible.
Yeah. Nice to have an infinite bank account to be able to just keep rolling indefinitely, saying, you're not going to get there. Just give me another month. I'll get there.
Yeah. I've heard when you're a presidential contender or before, you could, you get that unlimited margin future account, and eventually you can do really well.
Hey, she was an expert on cattle futures, sir. I don't know.
I was about to say.
How dare you disparage? I take umbrage.
I can't wait. That is so far in the future. But anyway, it's a lot easier to trade with unlimited margin.
All that good 90s stuff's going to come back. Whitewater, the cattle future, it's all coming. Get ready for it, because it's 2016 is like 1992 all over again.
Oh my gosh. Yes.
Good stuff. But before we get down the political rabbit hole and get everyone nice and depressed, we'll keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys take the reins I unfortunately don't get much of a rest, but you guys still take the reins. You know how to hit us up by now. Find us on the website, post a comment, or use the feedback form there. A lot of you guys like to do that. Or, of course, find us on social media, twitter.com/options, facebook.com/theoptionsinsider, or Options Insider on Stock Twits, or indeed just hit us up via email, questions@theoptionsinsider.com, and all that's baked into the mobile app as well, including, I believe, our voicemail number. You can leave us voicemails as well if you are so inclined. So no shortage of ways for you guys to reach out to us. Like our first listener here, Mr. MB2, he writes, "Hey, I heard you chat about legging spreads on the show. The strategy guy," I like that. Tusa, you are now the strategy guy. "Seemed to not be a fan of legging. Can he expand on that and his reasoning behind it? I've utilized legging many times as a way to improve my execution prices on spreads. I think it's a legitimate trading technique." Well, Uncle Mike, you get to wake up for your slumber because this one's for you. Seems like we have a listener out there taking umbrage with your, shall we say, dismissive view on legging spreads. So have at it, sir. The floor is yours. You may now rebut.
All right. In terms of legging into spreads, allow me to expand upon my reasoning so that MB2 can understand where I'm coming from on this. If you are legging into a spread for the purpose of hoping to get a better trade in a little bit, then I don't like it. And I'll tell you why. Let's say, for example, that I want to buy the 50 call, and once the stock goes up a little bit, that's when I'm going to sell the 55 call to get a better execution because of the fact that that's what's happening. And if you're doing it with the hope of the market moving higher or volatility moving lower or something along those lines, I don't think it's a good idea. However, if you are doing it because you have the technology to see, okay, at this exchange, the price is this, at the other exchange, the price is that, and if I execute these within a second of each other, I can get into this spread for another 15 cent better fill, as opposed to just buying it as a spread, and my broker doesn't match the NBBO on all the exchanges combined. If you're doing that, then I think it's okay if you have the technology that you can do that with. But if you're hoping for something to happen to get a better fill on your spread, then I'm not a fan of it. And here's why. The reason with which you get into a spread in the first place is because you want to mitigate some type of risk, whether it's volatility risk, whether it's price risk, whatever the case may be. And by legging into a spread, by getting into one leg, then the other leg, then what you're doing is you're taking away the whole purpose in the first place of getting into the spread in general. So that's one reason why I'm not a fan of legging in. Now, here's an instance where I would be okay with legging into it. You buy XYZ call. XYZ stock goes up a little bit. And you initially were just fine being long XYZ call, the 50 call, let's say. But let's say you have an instance where implied volatility increases dramatically because of the fact that XYZ call option, or because XYZ stock had some type of an announcement that came out, and there's a lot more fear. But you believe that XYZ stock is going to continue to go higher because of your analysis, whether it's technical, fundamental, whatever the case may be. Because of the fact that this volatility has gone so much higher and you're still bullish, well, heck, you can get the 65 calls for $1 more than you could have before because volatility's gone up so much. The stock hasn't moved, or it's moved a little bit in your favor, let's say, but things have changed a little bit. Well, if that's the case, then I'm all for it. I think it would make sense if something were to change. But for purpose of trying to get a better fill, I think it just has too much to do with hope. And what's your plan if it goes against you? Let's say that you buy XYZ call and you're hoping that the stock goes up a little bit so you can get a better fill on the 55 call. Once again, I'm oversimplifying this. What's your plan if it goes against you while you're waiting to get this better fill? Can it work? Yeah, it can. But what's your plan if it does not? How are you prepared to take that on? And what's your exit plan? And from my experience, whenever I've tried to leg into spreads or do things along those lines, it comes out to being about 50-50, meaning sometimes it works, sometimes it doesn't. So I've come to the conclusion that if I am going to go into a spread, I don't want to leg into it in the hopes of just getting a better fill, in the hopes that the market goes my way over the course of the next day or two.
Yeah, I have some thoughts on this one. I know that was a popular topic when we discussed legging on the show in the past. I don't think MB was the only person to write in with a contrarian viewpoint. I will say that I think it's I'm not a big fan of just nakedly coming in and legging, because you're right. That is where you do get into a lot of issues. Sometimes people think they know more than the market. I remember in our market making days, we ran into a lot of issues, particularly on legging our hedges. That's a story for another day. But people always thought they knew better, and they thought they can get better levels. And of course, the vol level you just worked so hard to get was now blown because you lost 3 handles on your spoos, et cetera, et cetera. But I think there is a use case I think we can make an allotment for here. And that's one I've used myself. I think a lot of our listeners tend to use as well. Is for some reason you have, let's say, a single leg trade on, and it's going your way pretty well, your long calls and XYZ, or whatever, and it's now blowing through your strike and you're doing well, and for whatever reason you don't want to close it out. You think there may be still some upside, or maybe there's some other reason, tax or something else, there's some other reason perhaps you don't want to close it out just yet, but you want to take a little bit of money off the table. Then I think legging into a nice vertical, something like that, maybe you can get that spread now take off your risk, collect the money back you paid for that spread, and essentially be a risk-free trade, and the rest is just gravy at that point. I think that's a perfectly acceptable use case for legging. I think I more frequently refer to that as more like momentum inertia legging. You have some inertia behind you on the trade, and so instead of closing it out altogether, you leg into a spread. That's a perfectly, I think, acceptable use case for legging. It's kind of my reasoning behind why I don't like stupids, but I will accept them in that momentum style as well for whatever reason you need to do a different strike. So I'm a fan of that, but other than that, yeah, I'm not too keen on just naked legging because you think you know perhaps better than the market. Mr. Rock Lobster, where do you fall on this heated debate? And what do you guys over there at the pit teach your mentees when it comes to the topic of legging into spreads?
Well, the easy thing is, do the hard side first.
Well said, like a former floor guy. That's the first thing they teach us. Have them, when in doubt, palms out. Do the hard side first.
Right. You do the hard, that's it. I mean,
that's a good wisdom for life.
Just if you can get that side off and then you think the other side is going to be easier, that will also gives you a little bit of idea on what you think, how good you think your feel is for legging in the spread. If you're like, I think this is going to be the hard side, and you put it into the market, it gets taken in, before you hit the sell button. You're like, maybe I don't know what I'm doing, or maybe I don't have, the magic finger feel that I thought I did for which direction the market might be going. So that's about the only thing I could say. I know we have a lot of we do have traders more that leg out of spreads when things are moving their way in a certain fashion. So let's say you have an iron butterfly and it's, you've collected some decay in it, and basically your call side's near worthless and your put side still has a lot of value. So they go, okay, I'll close out the call side since it's not worth a whole lot. And now they have the other leg of the short put side, and they'll take the risk on the short put side and the decay. And if they get a little rally, they actually get a double whammy on how well that spread can work. So I think it might work better on unwinding something. What I would always say, though, is you don't want to unwind any spread that leaves you with an unlimited short contract, because you take the whole idea of the spread as a risk control trade and you chuck it right out the window. At least if you're unwinding, let's say, an iron condor or an iron butterfly, you still have a spread on. But if you got to be careful when legging into something, and the whole idea of a spread is risk control. And if you all of a sudden you give yourself a short leg, if you leave the short leg open, like, okay, I'm just going to sell out the long leg because it's made me money, and I'm going to keep the short leg and it'll probably work. Then you get, that's how you take all your money and you turn it to zero very fast, especially in a market like this.
You don't need to close those short legs. What are you talking about? You made the money on the long. The short just kind of goes away on its own, right? That's how it works.
Yeah. So legging.
85% of all options expire worthless, don't they?
There you go.
Yeah, exactly. Well, you know what I have? If I have shell spreads and the short side goes near worthless, I'll close the short side but leave the long side open. Legging stuff, I will leg pair trades. I do a lot of pair trades, like I just said, kind of long, out of the money spy flies versus, let's say, a name like Apple, where I think, okay, Apple looks pretty cheap, so I'll buy the fly here, and I'll wait to buy, my put flies, see if the market, I get a lift out of the market. Because you look at those trades and it's really, they have a delta sensitivity, but they're not hugely delta sensitive, right? So if there's a little disconnect between the legs, I don't worry about legging those very well. And basically I go, okay, well, I'll wait for 30 cents. If I don't get the rally I want on the other leg, I'll just put the other side on and off I go. If you trade option spreads, you have to be a lot tighter than that, because you could just destroy the whole chance of the spread making money because you end up legging it so poorly. So, if you're good at it, great, but there's some simple rules for avoiding, let's just call it disaster. Don't leave the short leg open. But you're going to do it anyway.
Yes, they are. It's so tempting. Why would you close that? It's worthless.
Because they go out worthless.
Leave it there.
Every month.
It's only
All
trading for a
options go
penny.
out worthless.
It's only trading for a penny. Why would I buy that back, Rock Lobster? That makes no sense. You're a madman, sir. But indeed, do the hard side first. Words to live by in spread trading and indeed in life. Uncle Mike Tusaw, before we wrap up this back and forth on legging, anything else you want to add here for our friend? I'm forgetting his name now. MB2.
MB2, I would agree with going along with momentum inertia legging. I would go along with that. If something was going your way and you wanted to take some deltas off the table, I would definitely agree with that. I participate in that myself. I personally don't consider that legging, but I guess with the new term on this show, we got to be up on the semantics because this is the forefront of all option terminology in the world. I would go along with momentum inertia legging.
We're on the bleeding edge, sir. We're coining new terms every day. Inertia legging. It's the new thing. It's new hotness in the realm of options. You got to keep up, sir. Keep up or be left behind. All right. Great questions. Only had time for one today, but it was a good one. And now it's time for us to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week into the weekend and indeed next week. And I think we kind of showed our hand at the top of the show there in the trading blog when we were all fed all the time. And that's kind of is pretty much what's on the horizon. As Mr. Rock Lobster alluded, not a lot of things to really bring the vol down until next week. They are meeting indeed on the 16th and 17th, so we will know more then. But until then, not a heck of a lot of other things that seem to be on the horizon to show any sort of things calming down in the near future. Mr. Rock Lobster, would you concur with that, or is something else you're keeping an eye on for the rest of this week into the weekend?
No, just the only thing is how, if China can hold up, that central banker, they've done just about everything they could to keep their market propped up, and it's still a pretty darn expensive equity market. And, we're waiting. Mostly I'm interested if they bid the vol into the weekend. Looking for some sort of China something or, whatever, they get all panicky and antsy again. If they sell volatility off and we have some weekend, getting ready for the weekend, I'd say, people are expecting a non-Fed. So again, but everything I'm setting up is kind of binary anyway. So besides looking for a place to start buying stocks again, it just we have some sort of, at least from a trading point, unless you're day trading, you're at kind of a binary outcome into, Wednesday afternoon. I think you could probably sell juice between now and then and collect some decay, as long as it's really short term. But I think those are types of trades, if structured properly, could work fine until, on Tuesday though, I would be exiting all that stuff.
There you go, sir. Mr. Tusaw, anything to add to that and the great Fed watch here of 2015? Imminent. We are imminent.
The Fed announcement is imminent. No, nothing much to add on that. I think that with everything going on, the only other market mover I could possibly see is the opening to the NFL season tonight on ESPN. But aside from that, I don't really see any market movers.
The one downside to having a female Fed chairwoman as opposed to a chairman is you don't get briefcase watch anymore. I mean, you don't think she really carries a brief. Maybe purse watch, would that really count? I miss the days of really just measuring the thickness of Greenspan's briefcase. That was the height of Fed lunacy, and I kind of missed that. Maybe there's some other indicator we can come up with for Yellen.
And what's funny is this when the Fed didn't even matter.
Yeah, you're right.
The Fed's only mattered since 2008.
Imminent.
And they made that one crazy raise in 1994, 1995. And then the market shuttered and went straight up after that, which is probably a recipe for what we've got going on here. But we'll see. They got to make their move.
But it's imminent, Andrew. I don't know if you understand that. It's imminent.
Yes.
All right. Speaking of things that are imminent, so is the conclusion of this program. But before we go, as always, let me check in with each of my cohorts here, my partners in crime, to see what they have cooking that may interest you. Starting with you, Mr. Rock Lobster, in addition to enjoying the scenery out there in the hinterlands, what's coming up in the land, the pit, that our listeners may look forward to?
Well, we have a volatility, VIX and volatility ETN ETP webinar this Saturday. So like I said, for the cost of 12 cents on a 10 lot, you could actually learn something. And so also, we'll be talking about how to position for this Fed meeting, the ways to look at volatility, how the products work. That way we won't get the question, well, the VIX is going down. How come my vol product isn't going down? They're like, well, there's reasons for all that stuff. So anyway, I thought this would be an excellent opportunity to get some learning on. So go to optionpit.com/events and sign up.
There you go, listeners. You heard the man. Get some learning on. Learn about some ETPs and ETFs and all things volatility related. And Mr. Uncle Mike, before we go, what's cooking in the land of RCM Wealth Advisors?
Well, we are accepting managed accounts again. If you are looking for someone to help you with managing money, feel free to give me a call. Be more than happy to work with you in any way, shape, or form. We don't have a minimum, so if you just have a couple $100 a month to invest, feel free to give me a call. The way with which we're doing things is we try and do things in cycles to where when we get a bunch of new clients, we kind of close things down for a while if we're overloaded, and then just kind of get our bearings, get to know the new clients, and then gradually expand. So if you are looking for someone to manage your money, and you just got a couple $100 a month, feel free to give me a call. I'm more than happy to work with you in any way, shape, or form. My phone number is 312-212-3531, or feel free to send me an email at mtosaw@rcmfs.com.
There you go, listeners. While you're busy registering for that Option Pit webinar, make sure to take a minute and give Uncle Mike a call, shoot him an email, and see what he can do for you. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. Don't worry, no long weekends this weekend. We'll be back on Monday for our usual show, and we'll see you then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.